All right. Good morning, everyone. It is 8:35 on the morning of November 4th, 2022, and this is my pre-market strategy session. The title of the video is Jobs Report Better Than Expected. So I'll go over here to Yahoo Finance. You can see the title here is October Jobs Report Preview, Payroll Gains Estimated to Fall Below 200,000. That's weird. The title. Let's go back to the title. Jobs report comes in hot. 261,000 jobs added in October. And at 8:30 in the morning, when that news hit, you can see there's a rather significant sell-off here. It went from 262.54 down to 258. But now it's looking like 261,000 jobs. That's higher than expected, but that's not too hot. I mean, in an economy that's recovering, 261,000 jobs added. It's not bad, really. That's it's not too hot. It's not too cold. Really, certainly better than expected, but it's not bad news. And so here we are. This red line right here is the neckline. At some point it's got to turn around and start going back up again. I think it's a little bit early. We still have, the end of the fourth quarter and then Q1 and Q2 of next year, which are forecast to be bearish. But then after that, it's kind of like, let's, everybody come out from underneath their shelter or, wherever they are, and, let's just kind of get back into the groove of things again. Now, the market likes to do things 6 months out. Market likes to forecast, value, into the future. It's not a futures market, of course, but yeah, I don't know. Really, the only thing I can do is just trade the chart in front of me. So until things start to turn around, the trend is your friend. This red line right here is the trend. That's the neckline to a head and shoulders formation here on the Qs. I pulled up BABA again, just to kind of show what happened with BABA. And so about a year into BABA, it was BABA's downturn. It was still going down. It came up to the neckline and tested it and broke down again. And so I expect the Qs to make the same pattern. And we've probably got somewhere around 6 to 12 months left. It doesn't mean that there can't be rallies. Obviously, you can see here, in this section here, it rallied. In this section here, it rallied. And these are rip your face off rallies. I mean, if you got short down here, in the 326 area, it went ripping back up to 371. I mean, it's pretty bad. But then again, it subsequently dropped again. So, for the time being, really, gosh, I'm kind of expecting a rally right here into the end of the year, just because historically speaking, that's just kind of what happens at the end of the year and going into the beginning of next year. I think that there will be a continuation to the downside at some point, but only after a rally. It'll set us up for one sort of big sort of capitulation bottom eventually, and then things will start to go back up. In the short term, though, I'm bullish. The VIX is coming down here. Bitcoin's doing a fantastic job of holding up above this neckline. Let's see how old this is. I think this is about the same age. This bear rally is about the same age. I'll call it January of 2022. So it's only about 10 months old, this bear market in Bitcoin. I mean, if you go back to November of 21, you could say it's a year old. The bear market on Bitcoin is a year old. And I like keeping an eye on Bitcoin just simply because it's sort of a really good indicator of risk on, risk off. All right. The 10-year and the 2-year have taken another dip here. And as the 10-year, 2-year spread widens, you can still see up moves on the markets. It's not until the 10-year, 2-year spread starts to normalize again, go back up above zero here again, that we actually start seeing a crash on the market. So I expect to see this 10-year, 2-year spread stay negative here for a considerable amount of time. In past history, I'm going to go to the monthly chart here. In past history here, this is 2001, and this is 2007. The market, the 10-year, 2-year stayed inverted for about a year over here, and then stayed inverted for about a year and a half in 2007 before the crash really happened. So yeah, the 10-year, 2-year is definitely taking a dip here. And I expect it to stay down here. We've got 1, 2, 3, 4, 5 months, almost 5 months behind us. We're about a little bit more than 4 months in inversion. So I mean, really, we could have another 8 to 12 months of an inverted yield curve before we start seeing the really big crash on the markets. So, to be bearish, it's the correct direction. It's the direction of the trend. To remain bearish, yeah, I mean that's the way to go. There can be short-term rallies in there, and certainly rip your face off rallies, as you can see. So after a jobs report like today, though, I do expect to see a little bit of a rally. So I will be trading to the long side, if for no other reason than to just have a dead cat bounce right here. 254.26 is the magic number for right now. So a breakdown below this recent low here on the 13th of October would bring in more selling. I think it's too soon for a capitulation, sort of a capitulation move. We could see that after Christmas of this year. January and February tend to be pretty bullish months too, though. So yeah. All right, my bias is bullish for the day. And I don't mind having a bullish bias because I can counter my bias. I like to have a bias because I know I'm either trading with my bias or against my bias. So it makes entering and exiting trades easier. I don't sit there and hang on. If something's going against my trade, if my trade's going the wrong way, cut your losers fast. So it just helps me cut my losers. I know I'm wrong quickly, so if I'm wrong, if I'm right, then, I let it run. All right. So yeah, that's pretty much the morning strategy session there for this morning. Gold is coming down. Just kind of, I expect with higher inflation to see gold come up. But it looks like this gold chart is saying that inflation has peaked. This is saying inflation has peaked. So, yeah. All right, everybody. Good luck out there. Keep your risks tight. Click like, share, subscribe. Leave a comment. Tap the bell. I'll see you on Monday morning's strategy session. Have a great weekend, everyone. I am out.